All right. Well, I'm going to wait a few minutes, let everybody come in. This is as soon as you start a live stream, there's nobody there. So, lots of unfortunate traps. What it is. What's up, Maze and Bluetooth? Cliff April 243. Hey, how's it going, Chris? Try to hey, what's up? Good morning. Try to kind of ease into it. There's always a a bit of a lag, with live streams, people coming in. So I don't want to go too crazy too fast, but I have some stuff I want to share for AMC, and then we'll look at some other charts too. I'm really curious. I think this one's going to be really good. SPY's doing weird stuff. Why is this so yellow? Why is this so yellow? Oh yeah, you're welcome. I don't know. I like to do it myself anyways, but it's a pleasure to be able to share with other people. So yeah, I guess we could do this breakout target. That'd be a good one to try. Let's fiddle with this while the stream's getting ramped up here. Let me try to make sure all my programs are not sucking all my data. It says it's pretty low, so if it's a little bit choppy, I apologize. Yeah, let's take a look. So I'm gonna do a Bulkowski target real quick, and then we'll do one for AMC too, because there's actually a flag on AMC, which is kind of unusual. I mean, like, there's not usually like that clean flag, but we'll do that. Earnings flag. What is that? He's got all kinds of stuff on here that I've never looked at. It's backwards. I'm kind of curious. He says earnings, let's see. It says earnings surprised good, and then it was like completely up, but ours was good and it was actually completely bad. So oh, look at that. An earnings flag is the best performing event pattern. But that's not what we got. We got a reverse earnings flag. Went the wrong way. Okay. So I'm like reading. So if you guys don't know, the patternsite.com. So it's got advertisements on here. So just so you know, I'm not telling you to pick Schwab, but this site's really good, and it's a bit clunky. It reminds me of like old 1990s like HTML or something, early HTML sites, just with the setup of it. But it's a really good website resource. So if you don't have this on your bookmarks, definitely get it. It's called thepatternSite.com. Thomas Bulkowski. I use his stuff a lot. I think he's probably my favorite because he's got statistical data that he uses. It's like thousands. He'll use like thousands of the pattern, and he'll come up with like a variable, like a percentage that it meets this target, and it's really accurate most of the time. So what I want to see is, I wanted to see a, it would be called, not a diamond top, it would be called like a widening top, but wide ranging day, wedge. Huh, what would he call it? Downside reversal. That's a tiny pattern. These are probably like the best ones to look at though, because it's like a bar pattern. You could read it on the day, trade it. But I know there's a, maybe it's a wedge. Widening, reversal, falling, broadening, descending, ascending, broadening. Here we go. This is kind of the one. So on SPY, we had this ascending wedge. And I don't know, it's actually more like horizontal. I'm not really sure if he has this one like listed. I've seen it, so I'm not really positive why. Let's take a look. Measure rule for upward breakouts, C. It says, refer to the two figures on the right for downward breakouts. Use the lowest valley as the target. That one's super easy. For upward breakouts, compute the difference between the highest peak and the lowest valley. Multiply the height by the above percentage meeting thing and add it to the breakout price A. Okay, that's easy enough. We can do that. I'm just curious, because I didn't actually do this, and I thought it was going to come back down. Like I thought this was going to be like a UT in the end, and it would drop, but it ended up having this really low. You can see it right here. It's like the lowest volume in this whole area. It had this super low volume pullback, and it was just not going to go back down. And so it raced. It actually broke out of the main trend, which, you know, we can look at this and say, hey, this looks kind of like a widening. Maybe it's just breaking out of that and going to the top. But I have questions about that. And I think I mentioned it in the last video or something that I did, that this doesn't, like, I don't know if I can count it. It's got like 1, 2, 3 hits on this widening, and then it doesn't hit it again. And it comes back down and it hits the bottom, you know, loosely 3 more times, definitely 1 more time. And then it just comes back up. So it's almost like you have to sort of just take it for what it is. It doesn't really seem to have a lot of touch points on it. If I lower this down to like roughly where that was, it definitely looks like it has more. And it looks like it just touched the top and then broke out. But I was doing it to the wicks, and that's why it doesn't look like it touches. Oh, that might just be all there is. So anyways, that target would be way up here at like where the widening starts, which is basically 456, which is super easy enough. I mean, and you can see there's a gap there, so it's like, yeah, we could go up there. This looks like a halfway point basically between that and 456. But I'm gonna do the measure thing anyways. So it says percentage meeting target for up and down breakouts. Up is 61%. So what we do is it's pretty easy. And I actually use my robot to help me a lot because I just don't want to pull up the calculator. Sometimes if it's like a 50%, it's easy, but if it's something else, it's not. So I would say this is probably B, and then this is A. And it doesn't have to be perfect. But that's, let's see, $8.27. Alexa, what's 61% of $8.27?
61% of $8 US dollars and 27 cents is $5 US dollars and 4 cents.
$5 US dollars and 4 cents. I'm not sure why she said US dollars in the middle, but so $5 and 4 cents. Well, I mean, it went way higher than that, but it's kind of interesting because, oh, well, no. It's almost where the gap of value is, but I guess it would be where it breaks out of the actual trend. So that breakout would have happened here in after hours, extended hours. $5.04 puts you at 446.88. That's pretty darn close to where it opened. So I mean, like, you can see what I mean. Like, his stuff. So he says the above numbers. Like, if you look at the site, it says the above numbers are based on 690 perfect trades. So this is a guy that's like traded over a lifetime and collected the data. And he may not have traded all these trades. He may have just gotten this information. But isn't that crazy? So like, that's a really good target. If you had bought in thinking it was going to break to the upside, and you were expecting it to get to at least 446 as that breakout target, you would have hit that like right at open, which is crazy. So really effective. Now in terms of like the widening here going down, that breakout target, since it broke to the upside, would just be up here. So roughly we're already like halfway there basically. So it's essentially like 457. And to me, that looks like, and I'll get to AMC in a minute. I know some people are really eager about AMC, but I'll get to it. But that looks like, and good morning to those that are coming in still. It looks like maybe like this. As long as there's continuation, you could see it coming up. So when I do price target breakouts, if it's something that I can do with Bolkowski, I'll do it because I like, again, the data. I think it's really helpful. I find it to be usually pretty reasonable. Like, the breakout targets aren't like ridiculous, off the charts kind of stuff. And then I'll look at just sort of like the whole, like, what's the trend? It looks like we have a bit of maybe a bit of a widening going up. Maybe not extreme, but it's definitely there, I think. This top right here looks really similar to this right here. This isn't a top, but this little park the truck. It looks really similar, but this one's a lot wider. You can see it takes a lot longer. So I do think the spread is widening. Really similar in terms of like, where it sets up camp. So I would say this has a pretty strong chance of breaking out to the upside, as long as it doesn't break the main trend. And even this one did. I think this was the fake out, right? And this is where all that low volume was, and there was like a high volume dump like the very end of the day. So I think it's pretty similar. You're looking for the creek jump, and then if you get that creek jump, you should be able to trade that, I think, effectively. So you would look for this to push up. You'd want it to, at some point, push resistance over 451, because until it does that, you're not advancing. And then I guess ideally you'd want it to come back down. And that sounds kind of weird, but this is kind of what you'd ideally want to see. I mean, in this example, it doesn't even, you can't see it. It happens in extended hours, and frankly, it doesn't look like it even checks anything, right? But normally, like, the S&P's pretty good about backtesting. And if it doesn't backtest the creek, it should at least backtest the top. Does that make sense? So even if it didn't like push over the creek and backtest the creek by going really dramatically, it could be like a really mild thing where it like pushes up. It should then come back down. It doesn't really make any difference in this case. The only thing you don't want is this. This is the only kind of bearish scenario here, in my opinion, right now, is if this pushes up high and then comes down and ends up kind of becoming really weak, and then you end up with like this breakdown. And it could look like that, or it could look more like just a single up thrust, where you get that push up and then there's like a secondary push up, but it fails to advance, and then it comes back down. Once it breaks below that creek, it could be kind of danger. We've seen them do like fake outs like this, where it comes back down late to check the creek and it still runs. And now it could be like kind of like what happened over here at the end of the day. See how there's like this really mild creek test and early on, and then like towards the end of the day, it looks like it's starting to like race back down. So it kind of pushes up high, but it doesn't break the high, and that's significant. It doesn't come above the climax there. It just kind of like pushes back down like it's going to go low. So like sometimes this kind of action can be a little bit, I don't know, like smoke and mirrors. But it would be a really good trade regardless. I think you're looking at pretty simple though. Like, so we have good targets. One has already been hit, so there's no real precedence to go anywhere else with this target. That was just for our purposes, just to kind of check it out. And that was this widening down here, and that's a really good target. The second one is the bigger one, and that is somewhere up near 456 to 457. I marked it near where the gap is, not at the very, very top, but it could come all the way up to the top. So breakout and support, you could probably be pretty patient with it. I think you're looking for that breakout and then the pullback. I don't think it's going to just race and like keep going. I think it would have that push and that pullback. Because I think on a lot of the higher time frames at this point, we're pretty overbought. I'm going to see if the RSI has come back down on 1 hour. Yeah, it's come back down to being not overbought. So you can see like how each time it's having to like press up, it's kind of like having to chill out too at the same time. That's what gives you a lot of these deeper pullbacks. I'm not saying that's what gives it. It's reversed actually, because the RSI is response to the price action. But volume has been kind of weakening in a lot of ways, going up. So the highest volume we have here was back in this range, way down here at like 420s, which makes sense because this is where like you have the bigger breakout of this downtrend right here, and then there's support. And once you get support, then a lot of people buy in. And then volume kind of like so-so. This is more or less just a place to drop off some sellers. And then you have a secondary buy-in right here on the breakout, which I wasn't convinced was going to keep going just because, again, widening, you never really know. It was kind of horizontal, and it ended up going up anyways. So now you've got a lot of sellers that are trying to like sell who probably were in positions from back here, you know, or down here even, or even on the way down, right? And I think that's logical. So I actually got into positions a little bit early a while back. I think it was when it hit, I want to say it was like right here, it hit like 413 or something, and then it ended up going down, and my positions went red, and they didn't actually go green till it broke out and it hit like in the 430s, and I got out, and then it kept going, and you know, it probably would have made 400%. But I made 100%, so I was like, whatever, I'm just going to get out. Because I wasn't convinced it was going to break this trend right here. I'm still kind of surprised that it came up and it just pressed through both of these. You can see there's like a huge influx of pressure points right here, and there's no retracement. It just jumps it. So pretty interesting. So anyways, at this point, pretty major divergence on like the 1 hour. You can see the RSI is kind of coasting downward. I think this probably will be visible on 2, but maybe not on 4. And on 4 hour, there's really no divergence. And then I would say that it looks, again, it's overbought on the 4 hour. Let's check the daily. The daily is the big one for SPY because you almost never get overbought on the daily without some kind of reversal. Like you can look at these tops. This is kind of during a bullish run back here. You can see that, and when it gets overbought, there's a pretty steep retrace. It comes close to overbought. There's still another retrace, and then it stays overbought for a while. And this is when you actually do get a divergence on the daily, where the price is still going up, and then the RSI is coming down. We haven't gotten there yet. But we're about to be in that kind of first stage of overbought, I think, on the daily. So I think it'll extend. I think this is what my guess is. I'm just guessing because I'm not 100%. We haven't seen the breakout yet. But without seeing the breakout, if it happens, I think we're going to get extension all the way up to 456. And then I think we're going to kind of bleed down pretty hard. We'll probably come all the way back down to the 440s. 442 or something like that. I would imagine like at least this gap will probably get filled, and then it's got to come back and check these areas right here, kind of where this yellow bar is, which is basically between, I don't know, I mean somewhere between 438 and 442 I think would be like a likely place to have a pullback. We could do like a Fibonacci thing. I'm sure it'll be like some fib level. That's what I would imagine, just because, again, the daily being overstretched. It's possible that, I guess it's always possible that you could just keep going up. Like that's what happened back here. It just kept going up. Even right when it got oversold, or excuse me, overbought, it still had another, I don't know, 2 or 3% in it. Yeah, 1.5%. So, yeah, I think we're likely going to come up to near this top. I don't know if we're going to break it. This is kind of an interesting setup for the S&P right now. I think it's not quite what people were expecting. We had a lot of really prominent figures saying that this was about to enter into into a bear market, but when I look at it, it looks like a 1, 2, 3, 4, 5, and then this just looks like a giant flag to me. So I'm kind of like, I don't know, man. If this is a huge flag and it can kind of break out, it's going to be pretty violent. So like it should have a big move, at least up to all-time highs again, which would be really different from what a lot of folks were expecting. On the other hand, you can see there's this kind of major creek where you've got the two tops right now, one way back in January, one in August. And so it looks to me like we would intercept that, which makes sense. Like that's kind of where our price target is, around 456. So again, just having that kind of extra layer of, yeah, that seems logical. That always helps. So that makes sense. Somewhere around here. And then probably some kind of a pivot, and then we'll see. But it could be, and this is what I was saying, like kind of interesting to me, because it could be that this is a massive, and it's a massive like 50-50 swing around the top from over here at 430. So we went all the way up to like that 450 area, then we came all the way back down to like 410. And if you look at where that pivot is, like that center point, it's right at that top. So the fact that it's coming back above kind of makes me curious. You know, it makes me wonder if this is going to try to do something similar again. I don't know if it would be reasonable to do that again, but because I think in this particular case, it'd have to come pretty low. But you might see something where it's what did I say? Maybe here. Yeah, something like that, and then we'll see what happens. You never know. The bottom ended up being pretty solid call out. I was looking for that bottom, but from that point forward, I've been kind of misreading the tops. So I'm just going to kind of wait for the trend to reverse before anything else. All right, let's go to AMC. So I know that's why people show up. Some of you. Y'all are like, I don't know. It doesn't matter to me. TV standard of internet. Yeah, I'm not sure what you're referring to. If you're talking about the quality, it's probably bad, but if you were talking about that website, yeah. All right. Yeah, so I had called out in like a really like loose way. If you were on the Discord group, you probably heard it early. If you were only watching videos or whatever, I didn't make a strong call out about coming down. I said that there seemed to be a possibility before earnings, and I got that chart somewhere. Maybe it'd be easier just to grab the screenshot of it because I think I hit it. So I'll pull that up. But I had posted a chart in our Discord group about a possible pullback, and it's based on that 2020 bottom. And I want to give you guys a little bit more because I think that a lot of the times when we talk about bottoms and all this other jazz, you know, we're kind of beating the same drum, And as a person who does anything on YouTube, if you look at how many times people have called for some fractal to come to fruition, it's not that much, right? Like it rarely actually happens that way. And I think the main point is not to say like that it's going to be 1-to-1, all right, or that it's going to be exactly the same. I think my main point is that I want to be clear that when I talk about this 2020 fractal, it's a model for a lot of AMC bottoms because it's a very classic example, I guess I should say, of that kind of almost double bottom like structure, but it has a spring. You know, it makes a lot of the same Wyckoff moves that you would expect in an accumulation. It's really long term, which means there's a lot of information there, so you can look at it. It's a 10-month or whatever sequence of events, and I think that ultimately it has a lot of really great gosh, it has a lot of really great. Sorry, I was looking at my screenshots and then I saw something where someone was laughing, saying that LOL, who still thinks this is bearish? That was back when I got kicked out of the Discord group, right around here at like 1080, and then it dropped like 30% like the next day. Yeah, apparently somebody told me that like Ant's trade was also laughing or something about coming down to 6. The thing is like the reason I saw it was because the setup here had the cat ears. I don't know what else to tell you other than like when I saw this and it went too high, I didn't like it. Okay. I'm not here to like rag on other people. That's not the right thing to do. But I will say that, you know, when folks are talking about stuff and they're really bullish or they're really bearish, they kind of don't open the door to the possibility of a reversal either way. And I don't think that's a good way to trade, but what do I know, right? So when I was looking at the top, I was very dicey about it. And that's another reason that people like don't like when you say stuff. And I can tell you from experience that just in general on the market, when I post videos about, and I'm not as certain, you know, I get a lot more dislikes and I get a lot less viewership. So I know why people don't like that. They want direction. They want someone to give them the answers. They don't want to have to, no offense to anybody, but they don't really want to have to think for themselves because they want someone to tell them and something they can agree with, right? And it's always easier for someone to plop a fractal on the screen because it's easier for people to agree with that. It just is. So the reason that I'm like hesitant to talk about those kinds of things with any group, but especially like the people that I trust in these groups, is that I want to make sure that folks are aware that I'm looking at things from kind of a helicopter point of view, and I'm thinking about how bottoms form, but how would a large, humongous bottom form, right? Not just like this little guy over here, which was really small, and it was a bottom. So anybody that called this as a bottom was correct. It ended up being a bottom. But then when you get to this place, this does look like a bottom, but the rest of it ends up being kind of a fake out, you know, and it just doesn't succeed. And I think it's frustrating for folks because they're looking at the TA and they're saying, well, I don't get it. You know, a while back you said you thought it would come up, pull back, and then run. You're right. And actually, to that point, we did get it right. I mean, it got all the way up to where we thought it would go. You know, and I don't think that it's sort of like throw the baby out with the bathwater kind of stuff. Like, I don't think you should just throw it all out. But you have to remember that, like, I don't control the markets, right? Nobody does, except for like these big money players, right? So a while back, let me see if I can pull up a screenshot. This was kind of like what I thought was going to happen. Okay. I thought we were going to go up, continue to like push to the upside, I thought we might come to about this spot right here. I think I marked it as like 1080 to 1115 or something like that. We actually came higher than that. We came a little bit higher. I think we went all the way up to, I don't remember what it was exactly. Yeah, we went to like 1117 or something, right? And I thought we'd come back down and basically do the same thing again. We'd back up all the way to the creek. And then what we would do is we'd come back up and break out. So as you can tell, like that didn't happen. So when we came back to the upside, what went wrong? And why does that matter for what we're talking about now? Well, it matters now because at this point, you are in a downtrend, period. Okay? You don't want to be in a downtrend, doesn't matter. You're in a downtrend. So the price action reversed, and it reversed right here at the last kind of minute. And it really came down to, and I mean this very sincerely, like I think it came down to that one day. And I know that everything in the price action has to kind of work together, but I think it was specifically right here. Like when it came back up and it broke above, I remember it broke above like 1057, and then it came back down and it found support on 1026. And so this is the place where we saw that pivot was early. And instead of, and this is where I think people get kind of lost in the woods when it comes to Wyckoff stuff, because it was like confusing. I mean, you're like, well, wait a minute, you're going up. How could that be bearish? And my expectation was not this. It was that we were going to come back down and like swing back low, right, going into like our earnings, and then possibly break out or whatever, okay? And it's quite opposite of that. You come up high because that's where people want to sell. It's not that complicated. Think about it. Would you rather sell at $10 or at $11.30? Well, you'd probably want to sell at $11.30. You're going to get more bang for your buck. The thing that really threw everybody off, and myself included, yeah, there's this kind of divergence, for example, on like the 30-minute. The main thing was there's just not a lot of volume here. So to this day, I'm still trying to kind of wrap my brain around that. And I think that what we're experiencing is that we don't have an operator who's ready to run yet. So like, I think what the main gist of this is to me is that there's not a lot of volume from sellers because there doesn't need to be. And I know that's kind of weird, but normally in a sell-off, in like a top, you end up with really high volume. Even looking back here, like look at the auto reaction here on September 14th. Look at that massive amount of volume, right, to sort of stop the movement after that big upthrust. Like we don't have anything like that. So it's purposely kept really, really low, but it goes too fast. And I remember on Discord saying that I thought that that's not good. Like, I don't know why we're pushing 1117. We're not ready. I said, we got to hold it. Like, that's all there is to it. Instead, you get a 1-2, you know, an upthrust and a upthrust after distribution. And then it ends up closing both times beneath that mark. And that's bearish. So then I go and I flip around and I say, well, look, it doesn't look good because you lost the ability here to break out. And then you're relying on kind of a falling knife to just suddenly reverse. You're relying on basically, not to say luck, but sort of like you're just kind of hoping against the chart that somebody's going to come in and like reverse it, and it's really just this bear trap, and there's no way to know. Like, you cannot know if there's going to be a bear trap or not. So then we had earnings, and of course earnings was like this huge deal because it's like this great thing. But even going, because everybody's like, well, earnings is really good, it's been 100 and whatever years, and it's the best one in 130 years or whatever it was, 103 years, I don't remember, but it was something like that, right? And that's true. But the setup at that point was not bullish anymore. Like, it had to go the other way, basically, and completely avoid a head and shoulder here. And it had already broken down. I think it was like, not this one. This one was like holding, but it had broken down out of this guy right here. And that was our main uptrend. So you're basically looking at this point at, well, you have essentially like a head and shoulder setup. And I'm walking us through all of this because I want you to see, like, how do you get from A to B, Booksy? How did you go from being like bullish to bearish all of a sudden? Well, it started back here on this early push-up, because this early push-up doesn't make sense to me. If you're about to go into an earnings report, why are you trying to press that top without having that second accumulation? It's just this kind of idea of like, that's a seller's move, you know, to try to race it up before earnings. Somebody knows something, right? Somebody knows that like they're going to dump the stock. They know that Adam Aron's going to offer shares, right? And so when I look at that, I looked at that and I said, well, I think it's going to come down. And this is where I get screwed incidentally, because incidentally, I just happened to be gone and I should have gotten out of position, right? Because I thought it was going to come back up and start forming this guy. And this comes from that 2020 bottom. And by the time we get to the day of, I had pointed out a target up here, pretty much the same target that we've already had, this like 1057 area. And then, you know, sure enough, if you go to extended hours, it's actually what happened. Like it came up above it and then it comes up again to like 1050. And this is where that redistribution happens. So when you look at it with the extended hours on, you see that head and shoulder action, albeit that final action is ridiculous, like sharp, right? But it is a earnings type action, right? And then the rest of this becomes this kind of sell-off, and then you have a high volume sell-off into a high volume buy-in. It looks like it's a stopping point, but and again, volume just kind of like dries up. There are buyers here, but these are a series of LSPYs, last points of supply. I urged everybody in our Discord group to be patient because the buy-ins here didn't look good. They look like exactly what I said. What's an LSPY? It's a bear flag. It's a low volume buy up that comes back against the trend, but then ultimately there's no breakout and it reverses again and goes back the same direction it started. And anytime you see this kind of low volume chop after a big drop, you should be absolutely 100% like, I would say 100%. You should be like 80% bearish still, because this is not a bullish move. The difference between that and an auto reaction is pretty obvious. You see this? So back here we have these same things. You have a potential setup for a range right here. It looks like they're going to start ranging because you start seeing like that bulls are pushing back. You have one that looks the same, right? But then this one does something a little different. It doesn't have a drop at the end. Instead, it re-enters the range above, and then you suddenly have this huge buy-in, and there's a big pullback. And of course, there's all kinds of ways to track this. You know, you could look at the head and shoulder like this way. You could look at it the other way. It doesn't really matter. You can look at horizontal levels and breakouts, whatever. The point is that this is not an LSPY. This is a buy-in. Like, this is a stopping point buy-in. So what I was waiting for was that stopping point buy-in. And I thought maybe, so this is a big recap, I know. But I thought maybe that's what this was, because it does come slightly above the previous high. And therein lies the problem. Because what does a UT and a UTAD look like? Well, one push-up comes above, and then the second push-up comes above, and then that's it. And that's where we get the infamous kitty cat ears, right? And so the problem is that once you push resistance, and it's not a problem, it's just let's just call it a concern. The concern is once you push resistance, you've committed. You're either going to SOS, which means that you stay above the trends, you stay above the creeks, and then you push and break out, or you're going to distribute, which means usually there's a bit of a sign of weakness, and then you end up going over top again. So I had kind of urged everyone in our Discord group to not jump the gun on buying in. Because if you jump the gun on buying in down here thinking it's going to keep running, you haven't really seen yet that it's going to do that. There's no confirmation until you get above. So my call out levels were very simple. I looked at the previous top. I said, look, it has to get above 810 and stay above 810, which is 811, right? It has to stay there. If it doesn't hold that, it's not going to run. I said it's probably going to pivot from that point, because usually if you are going to break out, no matter what happens, right? And looking at it now, this kind of looks like an obvious sign of weakness because it went back down through this creek right here, although I don't know if I would have identified it at the time that way. Normally, if you're going to take off, like this is going to be the final point. It's going to be that top that was established, which is your preliminary, well, I would call it preliminary support / supply, because this is where it's dropping from. But the point is like that's usually where you're going to leave because you've exited that range, that lower area. So this was not like a magical call out to me. It was just, hey, watch out, be careful. 810 has to hold, and if it doesn't hold, you're likely going to get a pretty big slide, and that's what happened. But even still, I was hopeful, because if you look back at the bigger picture, and this is where we're going to get to like the main analysis today. I know you guys are like, why did you take this long? Because it's a live stream. We can take all the time we want, right? You get to the bigger picture, you can see there's an uptrend here. So we have this kind of narrative going, right? That there's this big buy-in. It seems like that anyways. There's this huge exchange of shares that happens. This is a massive increase in volume, right? If you look at the history of AMC stock and then you look at what happened, and I think even if you look at pre-ape, this is still like a massive increase in volume, right? This is definitely institutions changing hands, right? Like changing shares. I mean, there's no if and buts about it. Some large institution is exiting a play or entering a play or both. Okay? And when I look at that, I'm like, all right, there's a lot of volume here. It's low. We're all-time lows, you know. It looks bullish, especially here, and then going into the top here, it looks pretty bullish. There is a test of resistance all the way up top, but it fails. And yet still, when we drop down, there's like another big buy-in. And I looked at it, and I thought, and I think Stockfather and I both agreed on this, is that, well, you should see it kind of go through the squishy middle, which is, at this point, it's starting to be erased, but it's basically like this area right here, where I've got it kind of marked off in this gray. And the prices for that are roughly $8 up to $9.04, right? Like, that's where I would want to trade shares if I'm a big institution, because I've already traded a lot specifically or right around $7.96. I mean, you can see like the highest liquidity is really from $7.90 up to $8.10. I've already traded like a ton of shares there, so why bother? You know, that's kind of where I'm at. I'm like, why bother trading here? And we did trade here. And I think that's why we went sideways, like methodically and slowly for a couple days, because we were in a highly traded area already. And you can see the volume's still decent, but like the price action is super boring because you're trading across like a really high liquidity zone that's already been traded. There's not that much volatility on the whole in this few days. You know, it's pretty mild. It's really just kind of a quick S-curve zigzag if you look at the big picture. And I guess the purpose of it to get you to distribute again and then come back down and hit a new low, which we've already done. All right. But here's where things get kind of like muddy. And here's where things get frustrating for the bulls, because 811 was lost, there's really no precedence at all, in my opinion, to stay here. Like, I think maybe if you had a strong auto reaction, and that's why I've got the chart drawn this way, if you have a strong auto reaction, you form a larger range here, I could see us coming up to roughly this like $9 area, and maybe a little higher, maybe a little lower, and trading across that pocket. And that would be a way for them to essentially take all the buyers from right here and try to dump them again. So you can think about it like a larger version of this, right? Because, again, if you look at there's a lot of stuff we could look at, but if you look at the way the RSI worked, this pumps down, right? And what happens, as you can see, I'm on the 30-minute, is that it gets wildly oversold. So you come up and you redistribute so that you can drive the price, back down again. And notice that now the RSI, we're actually lower than we were before, which is a divergence in a bullish sense. We're lower than we were before, but the RSI is higher, right? So it's been successfully like cooled off. So how in the world do you see this happening on a bigger picture? Well, it's kind of the same thing. You could see something like this. I think this 733 might be teased out. We may not even get it. We might get it now, but I think we may wait. All right, because the future rollover date is coming up on the 17th, which is tomorrow, and then Monday. I do expect there to be some pretty clear like price action connections with rollover. Or this is exposure. This is rollover. This is expiry, and I do expect there to be some kind of visual connection with that and the price action. So I'm thinking that the desire here wasn't really to just sell off because they had a good earnings. The desire is probably to sell off going into this rollover date or this exposure date. And then into rollover, we may see that it actually comes back up and then back down again before the expiry date. And again, that would be to kind of shake out as many buyers as they could while also, accumulating perhaps in this top area that we didn't really get a lot of accumulation in. So the biggest concern that I have with that kind of analysis, though, is that we technically lost this creek coming down, and we lost this creek going up. And we haven't broken out of this downtrend. So if I were going to trade this, and I want to trade it, but I don't want to jump the gun on it. If I'm going to trade this, I'm probably just going to wait for this breakout. And if I had to like boil it down to like, I can only use like 3 lines or something like that. These are, in my opinion, would be the 3 that I would pick out. I'd pick out the bottom trend right here. I'd pick out this creek right here. And then I'd pick out this downtrend. And then I would know, of course, that the horizontal levels are whatever. Because these 3 right here, if you can get over top all 3 of those, meaning like, let's say Friday or Monday, you get up to 825 and hold that, specifically above 830 and hold that, then you're in a really good shape for a pretty big reaction. And yeah, this is kind of weird stuff, but this is how I see the chart. And I did a whole video about creeks and junk and how that relates to price action movement and how I see it. And to me, that's it. So if you're looking for the bull path, like that's kind of all there is to it. I think if on Monday or Tuesday next week, you're back above 830, you're probably going to see that bigger reaction and you're going to see some kind of a range form. And I know a lot of folks are going to say like, no way, we're going to go down first, blah, 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 blah. No. I don't think you can have it both. I think you can, I don't think you can just have it one way. Like a lot of bears will say that and they get really bearish and they'll say, well, it has to go down first. And I'm like, yeah, but bulls said the same nonsense, and you end up with this kind of dangling carrot price target at 13, and a lot of bulls are like, no, it's not going to go down. It's got to go up first. And I'm like, yeah, but this is AMC we're talking about. You kind of like, a lot of times it gets right to the barricade, and then it turns around, and then it comes back down later, or it gets right up to the barricade, turns around, and goes right back up later. So it's really, in my opinion, unwise to be like so definite about something that you think it's not possible it could do something else, right? I'm not trying to lecture you. I'm just saying, like, I know someone in the chat every single time says it has to go down here first. I don't agree with that. And I'll tell you what, when you start looking at this and you compare it to 2 different fractals, I'm going to use 2 pretty different ones, and I'll show you why. They're pretty different. And you guys are like, no, fractals, Booksy. Look, it's as an example, okay? Because there's always an example for everything, all right? And there's definitely examples that go against what I'm saying as well. But I'm just going to show you what I mean. When this did this price action right here, this looks ridiculously similar to what we've just experienced. Ridiculously similar. Right. And this is kind of where I was like at when I started thinking maybe we were going to do something more like this, and it would be this very large M-shaped bottom. Right. Notice that on the fall down here, it gets pretty extremely low. But as soon as it gets to like that low liquidity center, which it's kind of hard to identify. So what I did is I drew a little box here and I put like a 50% marker in it. And basically like this is where we hit resistance, and you can see that it actually goes to about 50% into the lower range. So it breaks through the support, it goes to about 50%, and then it hits that top resistance and then breaks out again. And then if you look at where it goes to, it actually goes back up to, in this case it says 25, but whatever this was at the time, it goes back up to this other area that has, and I'm talking about 2020, which is way back, that has a range built out right here. And this is where it chooses to redistribute, okay? Now, I'm not talking about creeks or anything else right now with this guy. There's a lot you could say about that, and I want to get into it eventually, but maybe you don't have to be slow and steady. But for now, like, just look at where those pockets are, right? And then if you come back to our own chart, where we are now, and you look at where those pockets are, and you look at where we are presently, we are actually sitting right around 50% of that lower pocket. We could come a little bit lower, I think, even to like 750 or something like that, but we're basically sitting on like the 50% of that lower region, like right now. If you look at the reversal point, same deal. So if I were like charting this out and I were trying to like make a point to say like this is what I think is going to happen, blah, 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 I'd probably do this. I'd say 50% is around 750. And then I would do the same thing at the top. And I'd say, yeah, this is the zone at the top. And I would say that you could come up to maybe 50% there, which is like 950. Because again, what's the point? Why would you come down and then come back up? Well, you're going to like these high liquidity points. And in this case, you're dipping slightly beneath it in a quote unquote spring-like action, but it's really more of a local thing, right? So do I think this could happen? Absolutely. And I wouldn't be surprised if on the smaller time frame, we got something really similar. So when you look at like the mini time frame, this is kind of interesting. I don't know if you guys have noticed this, but one thing about fractals that it's fascinating is that they repeat indefinitely within themselves. And so a lot of times you'll see, maybe not on purpose, but you'll kind of start noticing that, hey, within itself, you see the same kind of pattern form. And I find this to be a really similar pattern, like really similar. It's not identical, but it's really similar, where you're seeing that kind of initial push up. So if this kind of pattern right here can reverse and have that kind of push up that we're talking about in the bigger picture, that kind of gives us a precedence to say that this may actually be the trading pattern right now. Because it trades, the whole definition of a fractal is that there's it's iterative upon itself. If you go to like investing.com, it even says that. I mean, it's like the most tertiary, like basic definition, but that's what a fractal is. And it's this idea that this is the way the stock's being traded. It tends to play out on all time frames as it's doing it within itself, which is really weird. But it's because that's the way the algorithmic programming is working at that moment, right? This is how it's testing highs, this is how it's testing lows. Now, I'm not saying with 100% certainty that's what's going to happen here. I still think 733 is possible. I think that right where we are around 750 is also possible. I think that we could see a really strong reversal in this little lower area between 733 and 750. And if we were to see that, then I would want to see it break out potentially into next Monday or so, coming up higher. Now, here's where the grind is, right? There's no like single one-size-fits-all situation. And so the other thing I decided I would do is look at something I haven't looked at in a while, which is I wanted to look at the concept of rotational symmetry, which I think frustrates a lot of people, including myself, because it was so good and then it just wasn't, when we had that reverse split and stuff, it went crazy. But this, I mean, immediately stood out to me. And I'm just, because of me, it's my brain. I don't know what it is, but I see these silly things and I'm like, well, I guess I should take a look, right? So if you look at this bottom, this looks super familiar. And I think the reason that it looks super familiar is because we've seen it, but we've seen it upside down. We've seen it right here. Like, this is basically the same exact thing, but upside down. Now, you might say, hey, look, dude, is that wishful thinking? No, I don't think so, because remember, in Wyckoff, if you look at the schematics, they're basically just flipped upside down, right? But if you take this guy and you you mirror it, you flip it upside down, now take that and compare it to the bottom that we just made, especially looking at the volume, and tell me that's not like the completion of the rotation. I was looking for this for a long time. We never really had it, which is frustrating as all get out. I kept thinking that we were having it, wasn't positive what was going on. We never really saw it happen the way that we kind of were hoping it would happen. But check out that volume, and then check out that double top. Spooky, right? Now, why would this be even on my radar? Because you know I'm not like huge into like flipping fractals and junk. Well, I'll tell you why. Because again, when you think about distribution, in my opinion, I always think about it as like it's also accumulation for shorts. Correct? It is. So when you think about something being flipped over, don't think about it in the way of sort of like inverting volume or something weird like that, which does happen, I guess, but it's more of like one side's in control, the other side's not. And if I'm going to run an accumulation as a short operator and I want to accumulate more shorts and build that position, I'm pretty much going to run it the exact same way a long would. I'm just going to do it in upside down land, right? So this to me makes a whole lot of sense. And then I started thinking like, well, that's kind of interesting because in this particular case, it just keeps making higher highs, right? And I think a lot of folks, including myself, you know, we're sort of deceived by the idea of that being originally being like a huge like pennant, and really it was already distributing. It had made like a sign of weakness pretty early. Like this has made a sign of strength in my opinion. So when I look at this and I think about the potential for this to not be exactly like 2020, this is pretty much the same thing, except for one thing, right? This is the two schematics, is that you don't have what? You don't have the spring. There's never a push-up to go get back to, and I know you guys are like, this is kind of confusing, this example. Maybe I'm not making a lot of sense, but in this particular case, you've got the really strong bottom accumulation. I'm talking about, this is literally like June to November or whatever in reverse, right? Upside down. You have the push, you have the secondary push, and then in this particular case, there is I can't really see it because they don't show you the wicks on here, but this actually comes all the way up to roughly here. So it actually comes to like the high liquidity part. We can verify that real quick. Let's see where it goes. I'm pretty sure it went all the way to that top. No, there's no wicks there. Not really. Let's see where it goes though. All right, so this went to, yeah, basically that floor on that drop off. This is the one that has the wick that's missing. And then some of these are missing. So it goes to the floor on the, because you take the bars pattern thing tool and it doesn't take the wicks for some reason. I don't know why. So roughly here. So it's actually pretty accurate, right? Okay. Notice that that's like the low point. It's the top of the range right before it breaks out. We've already passed that. We're kind of inside of that. So again, is it a little bit more like a reversal of that or like 2020? It's a little more like 2020 right now. So it makes me think that they want to go lower as opposed to staying higher. But this is just an example, and it's one in which you don't have a spring. You have instead an LPS, and then eventually it breaks out and goes into a full-on reversal, right? And you get this kind of, as a result, I would almost say like a flat, I don't know what you want to call it, descending triangle maybe. But you get the idea, right? So what's cool about this is that when I looked at this at first, I was like, I knew it looked familiar, but I couldn't really find a good example of one. And so we ended up using, which I think a lot of other YouTubers used, was that one bottom, I think going, I don't remember, going into like February. I think it was January, February. That's a good bottom to use. There's nothing wrong with that. But it doesn't really look like the 2020 bottom in that way because it doesn't have that kind of ridiculous up and down action that happened in 2020. But I think it's pretty much the same. I think it really is. I think there's almost no difference except that this one goes down for a spring. So I guess what I'm trying to say is it's hard to see it because this is so choppy right here, and this just goes really high, really low, really high, really low. And I'm looking right now at March through April of 2020. But I think it's the same basic idea. I think it's actually not that different at all. And I think that's what kind of throws me off specifically, because I guess I want it's easy to look at fractals and be kind of thrown off by like volatility, but that's not really the most important part. It's about what's being checked, right? What's being tested. It doesn't really matter if it goes higher or lower. It's about what the check is, right? And in both of these cases, the checks are kind of exactly the same. And that's where I think it's cool to kind of draw this comparison. And this is what I was trying to preface in the beginning of this stream, is that I don't want there to be this sort of overarching like, oh, great, we're going to follow a bars pattern business again. How can I be excited about that? Well, I think that it's not about the fact that it's a bars pattern. It's about the fact that I think this could be a really strong accumulation, a huge accumulation. And that when you look at this and try to support it with other things like Wyckoff or whatever, you can find support, as opposed to ripping a bars pattern and just plopping it somewhere where you're going to get a definite run. This actually gives us an example that was actually bearish. This was an inverted example right here that didn't go in our favor. And then comparing that with an example that did go in our favor, and you can see the similarities, right? And both of them do the same thing. They both come up and they test a level that you're going to then trade on, right? So let me get rid of this fat pink line, this Pepto-Bismol line here. Ugh, I just got shivers. That's what Pepto-Bismol does to me. I get literal shivers. My spine tingles. I'm like, no. No. Both of them do the same thing. You guys are like, I can't see jack squat on your chart, Booksy. All right, maybe I'll clean it up. So we're doing a comparison. It'd be nice to clean it up, wouldn't it? Yeah, why not? We got some time. It's a live stream. I'll just do it. I like this kind of stuff, but I also think that, again, fractal comparison should be taken with a grain of salt. I'm mostly concerned about, let's see here. I'll just hide everything else down for now. And hopefully that doesn't screw us over, but that will help us to see better. I don't think fractal comparison is bad. I just don't like that it's used without like a proper analysis, right? So we know that all of these had that kind of high volume buy-in. We also know that they have an increase in volume towards the end. This is consistent with what we see here anyways, because I remember if you think about 2020, this is when we got that really huge bump in volume. And it's interesting to me because it seems like an operator wanted to drive the price up and then back down, like they instigate the spring, which is kind of fascinating. You can see there's a huge buy-in, and I know a lot of folks are going to be like, no, it was all retail. But I don't believe that. I think that there was a large institutional buy-in, and I think the evidence is the fact that you can go look back at the filings, and you can see that BlackRock had a pretty steep position in the stock at various times. So in all three cases, okay, Maybe I'll label them. We get a little bit of labeling going on. Let's do this. Why did you say it like that, Booksy? I don't know. Just trying to be cute, I guess. All right, so this is obviously now. Y'all are like, why? Don't do that. Don't say cute, Booksy. But it's cute. All right, this is June of 2021 to, let's just say November. I don't know why I wrote 21. One day we're going to be at 21. Let's see. 21. That's like 100 years from now. 98 years from now, I'll be dead. Oh well. It's crazy to think. Now you can say you were born in the 1900s. People used to say they were born in the 1800s. And then this is March 2020. So March to, we'll just say December, because I know it includes January, but you get the idea. Why did I dash it there? I'm failing right now. I want to see like a really deadpan like video. You know how like they have those fail videos? I want to see like a fail video of YouTubers who are just like making typos. I think that would be really funny. I know you guys are like, that's not funny, it's boring. But that to me is like hilarious. Like it has to be done seriously though. Like this is a real fail video. With like all the hype of like a normal fail video, but it's just people making typos like live on stream. I think it'd be really funny. I have a very dry sense of humor sometimes. And then I'm very silly, wet sense of humor other times, I guess. So this is the same thing, okay? They're all doing the same thing on this first bounce. It's the auto reaction. They're going up and checking prelim supply, but I think it's an extended auto reaction. So here's my thoughts on, I was thinking about this a little bit on AMC recently, because I thought to myself, well, the problem is, like, I think we were all charting it like this is a completely separate range, and it is. But then when you zoom out and look at the big picture, this is prelim supply in a lot of ways. I mean, up here, I mean, this is where prelim support rather. This is where we were trying to stop the shorts are really trying to stop the advance of the stock. So there's kind of 2 points of interest that I think need to be accounted for. One is the localized place, which is right here. You know, you kind of have the early days of the range are established, like for example right now around 8 to 850, that ends up being the top, right? And you can see that early bounce. You call it a bear flag if you want, it doesn't really matter, but you can see that preliminary support coming down. But there is another one which is way up here, right? And this ends up getting checked as well, longer term, but it does get checked. And I think these all do the same thing. I can't really see it very easily on this June one because the way I scaled it, the way it's scaling rather, it's doing weird stuff. So you can't really see it coming in. You definitely see the early one right here. And so that's not a question, but I think the later one, it's hard to see it. The bottom one, it's apparent. You know, I think it's an apparent retest. You can see there's that little point right here. I'm trying to like get it, but it's blurry looking because of the bars pattern. And then the next one is where it dropped off the top, right? Dave's like, I don't got time for all this, Booksy. Just tell me the freaking answer. I said it earlier, basically 750 down to 733. We're already at 750, so I think we're going to see a reaction to the upside, and then I think we're going to come back down. That's my opinion. But it could be like this, where you have like no further return. It's whether or not we have an LPS or a spring. And I don't know. But I actually think this range is forming out pretty much the same way that this inverted, I should have wrote inverted here. So 733 is kind of the low that I have right now in my mind, because I think that's the bottom of the previous range here, and that would make sense as a place to find support for now. It's hard for me to imagine it just kind of passing through it without there being some kind of reaction. So I think what we're going to see is that reaction is going to make us jump over the downtrend. So here, let's do the downtrends. If you're wondering why I have all these alerts, I can't delete my alerts. I don't know what it is, but TradingView is like not my friend right now. I'll just move them down, I guess. I've been trying to figure out how to delete them, and it will not let me delete them. They just never leave. It's some kind of glitch. So I'm just going to keep moving it. Whatever. Here, let's do this. We'll make it like comparisons or something. Okay. It's just so confusing. Too many dotted lines. All right, whatever. You get the idea. So what I think is that when this comes down, ultimately, like wherever it jumps over, that's where it's going to have that reaction. Pretty simple. I don't think it needs to be more complicated than that. I said you could really boil it down to like 3 lines, and I'm going to show you why. Put the alerts higher. Yeah, maybe. I think it's going to boil down to like 3 lines, and this is the reason that I think it's going to boil down to 3 lines. So there you go. Okay, so all 3 of them do the same thing, right? They all come down to like this kind of base middle area. They all have some kind of a reaction there. Ours right now looks a lot more like, here, I'll just put this up higher for now. Ours looks a lot more like 2020 than it does this inverted one. But again, I think, dude, I promise you, I'm doing everything I possibly can do to delete this thing. It will not delete it. It says, do you really want to delete it? And I say yes, and then it doesn't delete it. It just stop. Yeah, it just won't delete it. Excuse me. So we're doing good here. I think this looks really good. This is a good comparison. So the reason I like this is because in both cases, it's got a really similar double top area. I'm seeing the same kind of checks. It looks a little more like, to me, again, that 2020 area. We're coming down low. The next part we want to kind of look at is where does it stop? So in this case, the stopping point is a little different. I'm going to do this with like a different color. So in this one, this is where you have an LPS. I'm going to make it kind of light. The LPS stops it pretty early. I think this was like a 70 or 50% retracement. No, it looks like a 50% retracement backwards. So this, again, remember this was upside down, so I know it's confusing, but this was basically like a 50% retracement. This one comes super, super low. Super low. It actually comes down to basically like the lowest liquid center that they had, or that we had on AMC back in April. Because before that, there really wasn't much trading here. There were 2 strong reactions, I think March and early April, and then in April of 2020, there's a little bit more of a buildup of liquidity right here before it takes off and goes into like an SOS type phase. That for us, I think would be that 733. You can see there's a 1, 2, 3, 1, 2, 3. Notice that on this 1, 2, 3, this is kind of cool. I want you to see why this is so significant. Okay, I'm trying my best, and I know this is a weird time to talk about this. But this should be like really stand out, and to me, it's a big deal. So I'm like, let me hype it up for you. Let me just tell you how awesome it is. I'm not going to show you. I'm just going to tell you how awesome it is. Now, but think about this, okay? This tiny little guy right here it's like a micro of a bigger picture. This tiny little guy right here is like a micro of a bigger picture. In both cases, all right, the same thing happens, right? You get this kind of like triple bottom. But in the 2021, that secondary bottom, look where it goes. You guys are about to get super excited. Trust me. Look at where it goes. You see this little guy? I think you're gonna see it, and then you're gonna be like, oh, okay, that wasn't that exciting, Booksy. This is like a smaller version of the bigger bottom. You see this? It's almost exactly the same. It's actually quite amazing to me. Now, I'm not saying it is exactly the same. I'm saying it's almost exactly the same. Okay? But this really is it. And I know there was a guy a while back who came into the old Discord I was in who was like kind of crazy. He was like obsessed with this fractal because he said this looks like the bottom, and he was right. And I agreed with him. But then he said the rest of it was going to be like this, and that's not what happened. And I told him that I didn't really feel like on the big picture you would necessarily expect this to happen this way. So his expectation was that we would come back, find that support, and then race off to the top. And we actually came back to this support and then dropped. But whatever. Point is, he had a good idea with this particular fractal because he's right. Notice that even though it's a little more widespread, something really similar happens right here. There is a triple bottom. But in this case, once it hits that bottom, so it hits that bottom, goes into a little M shape, right? Both of them do. I wish I could draw this like, I'll just do this. I know people don't always like this, but I'm going to try to block it out for you. It's a visual example, so it's hard to talk about it just in terms of numbers. So if you're listening, you might be missing out a little bit. There's just not, I can't really give you numbers. It wouldn't matter to you anyways. So you have this initial push up, and then you've got this kind of reactive move when it comes back down. And then in both cases, it's pretty similar. Like the reactive move actually starts higher, but the difference in that it starts higher than the previous bottom. But the difference is that in the 2020 example, the reactive move comes lower. It makes that spring action. In the inverted June to November example, it doesn't come lower. It makes the, see that? So here, what we have is we made a lower low, right? So this is like your spring. Pringles. I put pring. See, that's what I'm talking about. You need a fails video. So in this example, you have a spring. In this example, you have an LPS because it never comes back and retests the lows. Pretty neat. Now, look at the big picture. Oddly predictive, right? Because what ends up happening on the big picture is you see the exact same thing play out, but on a much larger scale. So pretty fascinating, I think. So then you have essentially the exact same thing. Is no different. In this particular case, you have a, once again, I'll just do the second part. I'm not going to do the first part because that would make this thing real clunky looking. But you have a spring action, right? Notice how it's, again, it's playing out pretty much a one-to-one with the tiny guy that it started with. But that's the nature of fractals. It's like the way the stock is being traded to look for liquidity. Again, this is not like an all the time kind of thing, but it's definitely something where it happens, right? And then here's that double M shape going up. I can't really draw it without making this look super messy, but I think you'll get the idea without me like going too crazy on it. I don't know. Let's just make it like lighter so it doesn't look horrendous. Okay, and then the same thing applies here, but we have it obviously on a bigger, excuse me, not bigger scale, but with an LPS instead. So the reason I'm like breaking it down this way is I want you to see like that. First of all, there's nothing new under the sun. Like we've been in the same situations before, and you're really just looking at it in the same way. And if you kind of go about it thinking that it's all doom and gloom or it's all like super, super bullish, you're going to kind of come into it with this preconceived notion that it has to do something. I'm not saying it has to do this, and I know that that sounds weird because I do think there's other examples where this kind of price action has bled out. One example is December of 2021, the December 13th to 17th area. That's an example of one area that it starts off like looking really strong, and then it goes into January, and by January 30th it breaks down again, and then it ends up not being a spring at all and ends up being just like a continuation downward. But the same thing applies, except that right here it broke down. Like it gets to the spring, and then instead of going up, it breaks down. So the spring ends up still being like this hot pivot area that you'd have to watch. You can't take for granted it's going to go up. What resulted then was that it basically did the same thing you see here in 2020, but then when it came to the second spring, it failed and went down. LPS for this guy. Okay? Pretty neat. So it starts with this kind of M shape where you have a double upthrust. The second goes higher than the first. Both of them do that the same exact way. And then, of course, they do it on the smaller scale the same exact way. So now let's look at where we are. And this is where things are going to get a little dicey because there's going to be some debate, I think. So we've got a 1, 2, 3 bottom here. There's also a smaller 1, 2, 3 right here. Both of them are roughly the same anyways. They both arc in a really similar way. Meaning like there's a low and then there's a higher point and there's another point, but this one comes lower. So you have a very similar kind of bottoming action here, and then it pushes up and goes into sort of the breakout phase. It looks a little bit more in this way like the November 2021 example. So that's the way it starts anyways. And we might be that we've kind of switched between one to the other because of dilution or something. Because to me, when I first look at this, I would be more inclined to think that, and I can't tell you, I don't know if that actually went lower in April. We might need to check that. I'm kind of assuming it did, but it may not have. I don't know. It looks the same, but we'll see. Yeah, and that's the lowest it goes. This is the push down. So you get the major push up, right? Get the bigger push, and then you get the push down, and there's kind of a double top here. It's an M cross. And I don't want to get into that nitty-gritty bit too much. It should be enough to say that there's an M cross there. When you look at the main downtrend, obviously there's like two right here. One would be where the LPS happened before it comes up. And this bleeds into itself. This is all part of the LPS, right? So it's not like I'm kind of like confusing I don't want to making the term something it shouldn't be, but whatever. You get what I'm saying? Like this is all part of it. But there's also like the initial breakout of that trend. So there's another cross that happens here. We have the same thing locally that occurred after our automatic reaction because there's a pretty quick cross after the automatic reaction. And then it goes into a much larger kind of M shape where it's jumping over another creek, pushing resistance, and all the while it's forming out this pretty large pennant-like structure, which ultimately doesn't go anywhere until here, right? And you finally get across the pennant and then you go. And I would say that's fairly similar to what we would see here as well, or maybe even like that, but this is a pretty exaggerated example. This upside down one is crazy. It has a lot of volatility to it, but you get the idea, okay? Pretty similar. And then the same thing applied in this area as well. And in all three examples, you have to have that jump over the creek, and then you can go, which makes sense. So we're doing a range analysis, and we're using bars patterns to help us with the range analysis. If you don't know what I'm doing and you just joined or whatever, that's what I'm doing. Okay. Yeah, thanks for that, Alex. No, I know it was like not for everybody, but I wanted to let you know the reason that I do things like that. I don't want it to seem like, for people that listen and want to listen, I think it'll help you understand when I talk about sine waves and junk, like how I'm approaching it. I'm not at all saying that I've ever invented anything or whatever. I'm pretty sure that there's been people that have done this way, way, way before me. But it's just the way that I like to go about it. So, yeah. So you can see the differences are starting to pile up here. So in this case, notice that it starts off really similar to this inverted June model. And I think that's why I picked that out, because I noticed that this bottom looked particularly exact when compared to, I mean, it looked like a reversal of the June top to me, and especially with the volume. But then things change here, and this is significantly different. You can see that in this case, it dropped below the creek and it failed to come back above. And this is what I was saying in the Discord group, was like, we're below it, dude. We need to get back above it. Right now, it's just like hugging it, right? And it's starting to look more like, all of a sudden, it's starting to look more like that 2020 example. So we're getting kind of like a I don't know, maybe like a Frankenstein of the two. This one actually looks fairly similar as well. But the thing is this is such a low creek that it kind of makes me wonder, I don't know. Maybe I picked the wrong one. I don't know. This is so low that it takes forever to get down here. It's hard to say. Maybe I've got the wrong one. This is a tough one to do, because this is such a low, the space between the ears here. Notice that on each, you can kind of tell this is just a visual thing, but it matters when you're drawing creeks, because the visual here is that you have a really, really low spot between the two ears in the 2020. In the inverted June one, June to November one, there's no real low spot. The low spot is kind of the very first push down, and then the rest of it stays really high. And then in our current example, it's kind of in between the two. It has quite a bit of volatility. It definitely comes a bit more upward. Looks a little more like the 2020 example, but it's, yeah. So this is where my breakdown might fail a little bit, I think, because there's no real, I don't know. You can see that the levels are just different, I guess is what I'm saying. So the way it's interacting with this creek, the creek is quite different. Yeah, pretty different. I guess what I could do is look at this particular point where it breaks back to the upside, breaks back to the upside. No, I think I got it right. This is the place where it breaks back up. You can see it breaks that lower range right there. That's where it goes into like an SOS type phase. So I think we're pretty close to correct, without going back and like staring at it and trying to figure it out exactly. That's pretty close. So they're all a little bit different. Could I be wrong? Could this one be lower? Maybe. You know, there's probably an infinite number of them, because when you have a fan, you can do that. So if I went down to this support here, instead of using the top, if I use the bottom of this, notice that the top and bottom are both fairly applicable. So the bottom was here around 912. The top breakout is right around 970. And it seems to me that they might both be at play. They both look really strong. We might want to just keep both of them, since we're not like 100% sure. Yeah, that one looks like it might actually be perfect. Here, let's do this more exactly then. So, as I don't want to cook the books, so to speak, I'm going to go to the last little red candle here, and then I'm going to extend it. Yeah, look at that hit. Dang. Okay, so we're sandwiched right now between these 2 points for sure. There it is. So we've met the creeks. These are the creeks. So I'm going to leave it like that, because I think we might actually be in between both of them. And there's probably a similar thing that happened here, but I'm not going to be able to draw it because I can't attach the creeks, or I can't attach to the trends. The main point of this is just to kind of get an overview of like how we would maybe expect the price action to move after this. So in both cases, again, if you extend that bubblegum pink line that I got, let me get rid of this GFC thing. We can bring it back up later. I think it's important, but I don't want to have it on the chart right this second. And then we look at where they come back to. I think this one's a little low. I think it should be like right there. It's like a 50% marker in some ways, but it's not quite. It's more 50% of like where the trading is happening, not so much the actual 50%. It definitely is not for here, the actual 50%. There you go. So here's what I'm going to suggest to you is that I think it's so eerily similar to me, like that double up thrust, like everything about it. It's so creepy. Like the patterning is so familiar. Anyways, I'm going to suggest to you that this is pretty much what we need to have happen right now. I don't know, for example, like right here on this inverted one, I'm not really sure I have it right, because on these two, on the 2020 and the now, I've got it drawn and it's almost perfect. Like it comes to where that base line is here between the cat ears, and then on the top, there's no debate. I mean, you can look at it. It's really visually simple. But for whatever reason on this inverted one, I think it's probably because it was bearish and it was a stopping point. It doesn't really do that. It kind of doesn't. It just doesn't. I don't know. So I don't know what to say about that. It just doesn't. I'm not going to fudge it and make it look like it does. So we got to keep in consideration that, differences are good in this case. Gives us another example of something. So here's what I'm thinking. Each one of these kind of played out like the smaller part. This one would then suggest that you wouldn't actually make a lower low, because this, and then at least initially, it makes a lower low than, there's 1, 2, 3. I gotta count it out. I'm sorry, you guys. I'm not smart enough to do this in my head right now. SPY is tanking. It's down 0.25%. Yeah, it looks like it didn't break that breakout. Nope. But it did the same thing over here. So I'm not saying it's going to do the same thing now. It could be done. But I might just wait on it, because it did break this trend early, and then it ended up reversing, and so you never really know. It could be like heading for this guy. We'll see. Or maybe the run's just over. I mean, I don't know. I did an analysis on SPY early in the stream, and I just concluded that we've already hit the target breakout for this little range right here. It was 446, so that's done. The only other target we have right now is 456 for this bigger widening that happened over the course of months. I think it's likely. It looks like about a 50-50 distance from where we broke out. But that doesn't mean that it's going to happen, and it also doesn't mean that this has to happen now. It could have a range build out and then happen later. So Just FYI. Okay. Yeah, all right. So let's try to like work it out in our heads. My cat's staring at me longingly, but I'm not petting her. She's just in my lap. She's very sweet when she wants to be. I think that's the definition of a cat. They're kind of sweet when they want to be. All right, so this one has kitty cat ears, and then it makes a retracement and it stays high. So when you go back and you look at this, this ends up being about 50% of the kitty cat ear area. So maybe that's kind of a helpful thing to think about. And then this ends up being lower range. So higher range, lower range. I guess it makes sense because an LPS would be higher. That's a duh kind of thing. Duh, of course it is. But I'm thinking about this critically because I'm thinking about where we are now. And what I'm trying to do is I'm trying to piece, I'm like pointing at the screen. You guys can't see me pointing at the screen, but it's where my mouse is. So where we are now is at 748, and I thought we might come down to 733, but I'm looking at in relationship to, I guess it would just be like a combination of the two. I just don't think it's going to make a lower low right now. I don't think it's going to happen. I guess if it did happen, it changes a lot of things because it could mean that we've already had this kind of retracement. I know it seems like there's not one, and I kind of agree there's not one. I think this is like the 50% backup. So we backed up, we hit right after that earnings report, we hit 920 or whatever. I think that was us going back up and checking the middle liquidity, and then we came back down. And that same thing happened back in 2020. There was a retracement back to middle liquidity after a big drop, and then we came down low. So when we come down low, the question is like, well, how low do you go? Well, this is the debate, right? And I think it's 733, but I think it's because that's the only other place I can see outside the bottom. So 750 to 733 is kind of the pocket right here where these bottoms are from September. I don't know what else you could hit. After that point, you're just heading towards the bottom. So you'd just be a double bottom or you'd be lower. So all I can imagine, if there's going to be a reaction early, it would need to be right around here. So I think what we'll do is we're going to just draw it out. I'm going to put it at, it's pretty close right now. I'm just going to put it at 733 and we'll just leave it there. We could probably debate this for the whole day and talk about how we need to go look and see if this wick down low and if it came below the others or where does it go to. I remember looking at this up close in 2020 and it looks like this came down before it reacted back to the middle again to redistribute. All right, before the spring. We're talking about probably October to November of 2020. I think it comes back down and it checks that place it took off in April. So let's just go look. I don't want to just say I think. Let's just do it. It's not that far back on the chart. Yeah, so let's take a look. So here's 2020. And this wick is pretty low. So this wick looks like it comes down to like nowhere land. There's nothing here. Nothing it hits. It hits this one. I guess it hits this one spot that didn't get checked. It didn't ever get checked over here. So it's way back to like the beginning. But it's roughly like where this thing takes off, right? You can see it tested on the way down and then it wicks below. And then when it breaks out, there's a really tiny candle on the 1 hour. that comes right up to that point again, right here. It's itty bitty, and it's on an earnings date, which is kind of interesting. So this thing bled down into earnings. Yeah, and then when I go backwards, to me it looks like the place that it took off right here before it took off, and that's the early part of the range. So the first time it was in the lower 50% of the range, the place which finally launched it up into the SOS, that's the place it comes back to later to check before it bounces again. We're just kind of guessing that this might be similar. We don't know. But it's a decent enough analysis, I think, at this point. So I'm going to do it. And I'm going to look and see where that place is. And I still think it's probably 733. I really do. So it's running out of room here too. There's not much else to see down here. And I know, I don't even need to look at it. I know a lot of these higher time frames, like this is the 1 hour, it's already oversold again. Like I know they're oversold. I'm not concerned about that. So I'm fully aware that this is probably going to be, again, one of those reactive kind of moves. We've got another gap. We've got 1, 2, 3 gaps now on our current chart. One's up here. One's right here. And we have another one right there to the upside. So we've left a lot of gaps. They look like 50% reduction gaps. Like each one's about 50% less. They're probably going into a certain point, but I don't want to... This is a weird way to do estimations, and I don't know. It doesn't always work out. So this 50-50, yeah, there you go. I always think I'm right. Why do I even bother? I should just like assume. This gap is 50% away from the first gap. The second gap is 50% away to our target price of 733. And then I'm going to go ahead and guess that, again, the second gap, and the second gap is also 50% away, or the third gap, I'm sorry, is 50% away from the second gap to our target price of 733 area. So they are 50% reduction gaps, which, by the way, we did on the way up as well. We had 50% reduction gaps, 1, 2, 3 of them right here, and then we came back down. So these are definitely important. It's definitely important that these are like reducing by 50% towards a particular point. Volume, meh. You know, it's kind of going down at first, but we definitely got to pick up in selling over the last couple 4-hour sessions. Yeah, so I'm gonna go out on a limb and say that the first thing I called out on the Discord, 733, is my target. I don't know. Like, I guess if it could come down to like 722 or something. We didn't ever retest that one, and that was in the very, very, very beginning. So, anyways, I mean, it's hard to say. But this is an M cross, by the way. I know that we've been talking about that quite a bit. This is like a falling M cross, and I talked about this in the Discord group, and I said this is why it had to come back above 830, and then it had to hold support on 810. To me, this is not a difficult one to see, and it was why, again, I was trying to urge people to not buy in until they saw that cross, because this is just a downward move. And right now, what bears are going to say is that it's going to continue and just continue to drop, because it's like an S curve, right? And it's got to have like the same reaction down to that 50%. So it's going to go to 663. Are bears right? Could it drop down to 660s? Yeah, I think they could. I had a target of like 666 and 650, but I don't think that's what's going to happen. And I'm telling you that the fact that this is already, I'm telling you right now, listen to me. I think personally, okay, based on what I've been like looking at based on RSI, based on the fact that this has been like this wildly, crazy sell-off. We haven't had any kind of major reaction outside of that pushback to the 50% mark. I don't think we're going to go straight down into the spring unless there's some kind of a rush to do so, which I can't predict. I don't think it's going to happen. I think we're going to have a strong reaction when we get down to like 733. I think we're going to have a strong reaction. I don't know how long it's going to take, probably going into Monday or Tuesday. I think we're going to see these first gaps fill as part of the breakout. And we're going to see these like hop over, and we're going to race up to get to that other gap. And this is where I think you're going to start seeing, again, that similarity to, it's pretty darn similar looking right now. But I think you're going to start seeing that similarity to 2020. Because I think you're going to start seeing that there's these like crazy looking, really massive like upthrust movements followed by low volume pullbacks. And this is going to be the distributive action that's going to eventually give you, because this is how they would want to distribute. They would want to like get as many sellers on board as they could, screw them over, get as many buyers on board as they can, screw them over. All the while, they're trading that middle liquidity range. So you get to come back down. And then you break down again. And this time when you break down, again, you're breaking down like in like middle liquidity or whatever. And then you're coming really low after that. Like after that time, then you come back down and you're going down to the lows. And I know I'm making it basically look exactly like 2020, but that's because I think we're going to get a spring. I don't think we're going to hold for an LPS. If we hold for an LPS, it would just basically be like that. You just reverse this one. I had to break back out. I have to like hold up here and never break down and yada, yada, yada. So I think bears are looking really ambitious right now, ambitiously towards like 650s or something. I don't think they're going to get it just yet. I think they're going to be a big reversal. We're going to see it come back up to middle liquidity. I think at that point, it's either an LPS or a redistribution. If it redistributes, then we're just going to come down. And this time, we're going to break below the low. We're going to come down into the sixes. I don't know how low exactly it's going to go, but I think we will. I believe this kind of a price action, it's possible. And if it does happen, we're in for I think we'd be in for a much longer sideways action, much like you see here. I think the spring is going to give you a more robust push. Now, here's where things get really, really, really interesting to me, okay? I haven't done this on the reverse model, so I don't want there to be like a assumption that I've checked everything. I haven't checked everything yet. I'm doing a lot of that stuff right now. But here's where things get really fascinating, okay? If you go back to looking at the setup, for example, in 2020. Yeah, I hear you, Von Page. I'm sharing my analysis. I don't agree that we're just going to drop straight to 4 or 5. I do think we'll get down to 6 something, but I don't necessarily think we're going to go all the way to 4 or 5. I think that's like a dangling carrot. Is it possible? Sure. Do I think we're going to definitely do that? No. Can I know for sure? No. Can anyone else know for sure? I don't know. Maybe an institution that has insider information knows for sure. I personally can never know for sure. All right, so here's where things, to me, get pretty fascinating. So if you look at the resulting price action here and like what happens, and when you go from these bottoms to these tops, you'll note that the price action jump that occurs later ends up going right to and like resting on this particular hook line, right? And then if you notice also from right here to here, it ends up being like this perfect kind of spanning of, again, like where does the price action go in the future? I'm going to turn off the RSI for a minute. You see this? So this is kind of cool because then suddenly it puts into light this particular price action in a really different way, doesn't it? It makes it kind of like painful to see because you realize that the buy button removal is absolutely like was a mathematical thing, which we've already seen before. It quite literally opens here and then redistributes along this mark. And I know it goes below it, but then look at what happens right here. It's the same thing. Ultimately, like this is where it's sort of pinned. So there's an M shape and then a W shape on either side of these particular trends. Okay? And what's crazier to me still in looking back at this is I look at this now and I'm like, well, I don't know, man. In the grand scheme of things, we knew this was like an SOS because this ultimately comes back up, finds support here, and then it takes off, and then this is a reaccumulation. And then the reaccumulation is really what takes place between these two creeks, right? These fans, if you will. But here's where I would like to make that comparison with where we are now, because we already have one of these lines. We have this one. We don't necessarily have this one, but we might be able to guess based on where we think it's going to go, you know. And then another thing we have that's kind of interesting is we have a 50% marker, and I haven't done that just yet, but I think it's about the same as this lower one. It's almost identical. Okay. What this gives us is a pretty strong estimation of where timing-wise we would hit this. So at the time, I think that you could look at this again and say like, well, I don't know, Booksy, you know, there's a number of ways to do this, and it doesn't really seem like any one of these is like perfect, and I would generally agree. It does eventually kind of cross some of these like more or less exactly where you would expect it to, and things like that. But in terms of like where these guys are in relationship to these high points, I think it's a pretty close estimation. Does it make sense? We're talking about time right now. So it's hard to estimate time, but we can try to do it, which is pretty great. So I'm going to do that, basically. So again, we don't know exactly where this middle one is going to be. Not yet. Like I said, we could do like a 50%. It might give us an idea. But we do have this guy. Like, this is definitely something we do have, which is kind of cool. So we do have this guy right here. And then we're going to try our best. We're going to make like an educated estimation, I think, of where the next one might be. So what we could do is we can do a 50% spread. We're going to have to make one assumption, which I know like people love. We're going to have to make one assumption, but that assumption has to be made or else you can't do it. And that assumption is going to be that we hit 733, okay? Because we don't know where the bottom is exactly, we have to just kind of estimate it. It's either 733 or like 722, in my opinion. Unless it just makes a new low and goes into a spring action right now, but I don't think that's going to happen. I think it's going back to the floor to check the floor, and then it's going to bounce, and then it's going to nosedive into a spring action. So I think we're going to go to 733. I could be wrong. I don't think I am. I think we're going to go to 733. So therefore, what we're going to do is we're going to do like a 50% spread from top to bottom. And we're going to see roughly where that is. It's pretty dang close to where that other line is. That lower line went. So I'm going to say 733. So what we'll do here is we'll kind of mark it off in reverse. And I know this is getting kind of messy, but it should work. I can't tell where the heck my marks are though. This is where things get kind of sloppy charts if you're not careful. I think this one's messed up. Well, this was one I just used as sort of like a rough estimation. I should have made it more exact. There we go. Now they're all going through the right spot. And then I know I said 733. Technically, like the spring goes below 733 over here, but 733 is the bottom from here. It's where we actually found support, and then we went into spring action. So that's why I said 733 instead of like 731 or whatever it is. Okay. Yep. So this would be a massive upthrust potentially. And then it would come back down. It would check the previous top. This makes sense to me because that's where the previous top is, and it's where that hook is. This one I'm not as sure about, but let's go ahead and do the extension here. I feel like this might be it. I think we might be right. Yeah, and then what we can look at, so if it fills the gap, it would go up past this. But if this ends up being like some kind of a super violent reaction, why would it go all the way to the gap? Where did it close? 1009? $10.09 is the gap value. Yeah, I don't know. It's really high. It'd have to break down if we were going to come back down. So we would at least have some kind of a... I don't know. This is where things are getting kind of mucky. We'd have to have some kind of a trend breakdown here. Like maybe there'd be a widening or something. Because this is iterative. This idea of like 50, 50, 50. And then you have a weaker final push. So you'd see volume drop here. There'd be some kind of divergence or something silly. And it would just barely make it to the gap. And then you'd have a breakdown. You'd find some kind of early support, maybe right here at this previous top, but it'd be a little bit of a weakness too. Like, so there'd be like an early check here. Maybe you would check 903 coming up. And then when it comes back down, it would go below 903. That would set up like a distributive top. And then we'd come above like 967 or something and then redistribute down. Again, assuming that this is the way that it happened and it didn't just LPS here, which is possible. I think if it LPSs, it would be, and an LPS is a last point of support, it would probably be like in this case, if you guys remember in the June example, it looks like a giant pennant. So the LPS just never comes back down until later. It kind of happens like a little bit later, but it never comes back down below this uptrend. So that would be a good way for us to see the major difference, because I think in here you would probably stay and go back up. You'd end up forming out like a longer range instead of, it would be right there. So probably at 846. You know, I don't know, man. Volume profile kind of supports that, but because there's a gap here on volume profile, it does support this idea that you could, you know, mess around here for a while. All right, but then we really want to see timing. So we've got a gap target above. And this puts us out in December, and then another one puts us out in February. So I think right in the middle is January. We might be in for another like January run. It's actually really similar timing. That's kind of spooky. I think this is about the same too. It doesn't look like it, but this one actually just has more of like a straight up action after there's a bigger drop. It's really a reversal of what we see here, right there, and then ultimately down bottom, but here especially on that breakdown. So let me see one more thing real quick. I'm not going to assume that this is going to do some massive buy button removal squeeze. I'm going to just look at the targets that were hit. There is a gap way over here that was filled. So these early ones end up being not the top. This ends up being the top. It goes up to the next. It might be that same idea, just really compressed. Interesting. Well, let's see what it looks like. Hey Alexa, turn off the timer. I know this is kind of crazy. I'm just kind of curious, so I'm gonna do it. Interesting. Well, there are some similarities. So like, I don't feel like it's 1-to-1, but it's a giant. I mean, both of these have like a huge bear flag. I don't want to make it seem like it's the exact same thing, but they both do. They both have a huge bear flag. In both cases, that bear flag breaks down. And we could do it more sideways if you want to see it like that. They both have like a pretty succinct breakdown. And then I know this is crazy different. This is the place that things get kind of like confusing to me. Ultimately, where does this go? Like, where does it find it needs to camp out? It's really here. It's on the middle of this S-curve, because this is really where, if you notice later, this is where you have the major breakout going into June. So everything that happens below that point. It's in the middle of this S-curve. On AMC, we don't really have that right now because there is an S-curve, but there's no real midpoint. I mean, we've got, I don't know, I guess you could say right where this gap is, because that is between the two quote-unquote S-curve parts. So there's a couple possibilities here. One is like way later, though. It would have to be like significantly later. I don't know. It's tricky, huh? Things are getting kind of crazy, right? This analysis. I don't think we're going to get to 42 for a long time. I think it's going to be like 2025. That's just my opinion. I know people are going to say we're just going to rocket straight there, but I don't think that's what's going to happen. I think we're going to go up and we're not going to get past like 25 or something like that at first. You remember how we just talked about, not that long ago in the stream, we just talked about how this first 2020 bottom had like a mini version of itself. See this? This is like a mini version of itself. It didn't take off here. Now, I'm not saying that it can't take off. This is we're doing something right now that if I'm right about it, and this ends up being a bottom, it's somewhere in between these two, right? It's not like it's not as short as this one, and it's not as long as this one. It's somewhere in between these two. But you see this blue line coming down? I don't see any reason why we would break that. Like, this is the main creek now. Like, there's no other creek that really matters in my mind because this is the next one. Now, there are others. You can go up here and draw others that are like kind of halfway or whatever. But this to me is the lowest one. The top in August to the top in July. And so when I look at that, and there's another one right here that's kind of steep, but I don't know if I count that one as like this is more of like a short-term kind of halfway. You can see this is like a 50% from here to there kind of thing. So I feel like the likelihood of us getting up here and getting back to this gap fill, because we didn't make a V-shaped reversal like immediately, I think the likelihood of it is super low. And when I look at this right here, what I see is a pretty straightforward like 50-50 mark, you know what I mean? Like halfway and then halfway. And I don't feel like in either case it gets you to 42. you'd have to eventually break out. So my thought is that, at least initially, is that we will get some kind of a breakout, and we might end up, if we're lucky, and this doesn't end up being really bearish, right? We end up with some kind of a move like this, right? And maybe we get to, upper 20s or something like that. But it's really hard for me to imagine, at this point anyways, getting to, considering like everything we're looking at right now, getting to that place before April of next year even. And I think that March is more likely. Like, I don't know if this makes a lot of sense to people, but this is sort of what I would imagine if we were going to make this run. So for right now, like, this is kind of what I'd be thinking. And then I don't imagine we would just go straight up and break this creek, like, to get back to that level. What makes more sense to me is that you have kind of a 50-50 move, much like what we did in January. So if we hit a bottom, for example, around like 680 or something, and you came up, you can see that the 50-50 move here is very clean to like 26. If you really wanted to get to that creek and you wanted to do it in a certain amount of time, you could drop it a little bit lower. You could go to like 650 or something. I don't know, it didn't drop it any lower. But if you drop it a little bit lower, you could actually get a bigger move, because you can see the slingshot on that would be much, much larger. So this gets you up to the creek, which is about $30. It's more in line with this bottom than anything else right here. So I personally think that it's much more likely that you don't actually come to 45. And then I don't know beyond that, like, what exactly happens, but I know that there's a huge amount of time here. So after that point, I think you're likely going to end up spending a long period of time. And if we're kind of looking at this like this could be a smaller version of a much larger picture, we may end up breaking up and pushing above this creek at some point in time in the future. It's definitely possible that this happens, but I don't see why you can't. I mean, we could easily argue that this is going to form like a huge top, There's just an argument there. I'm not saying it has to happen. I'm just saying. So does this happen in middle of next year in the summer? Maybe. Or maybe it ends up coming back down and we end up doing the same nonsense we just did, but we do it on a much bigger scale. And if that happens, there's no way. This isn't going to break out until, much, much later, in my opinion. This could be how we eventually get down to like $5. You know what I mean? There's a lot of people that assume that that's going to happen right now, but it could be a year from now. And they might keep that price target. They might reverse it for a minute and say, oh no, we're actually going to 30. And then, oh, now we're going down to 5. You know what I mean? Like, and they'll keep those price targets, by the way. I believe 100% institutions are they're just trying to screw everybody over. So if we ever made this kind of a move and we got up to the 30s, they're going to be saying stupid crap like, we're going to get to 50. And everybody's going to think that it's going to happen. And then it's not going to happen. And then we're going to be coming down. They're like, oh, we're going to get to like $3. And then we get down here and they're like, yeah, it's going to go to 3. And then it actually goes to like the original target that they had of like 5 or something. You know what I mean? It's always like dumb stuff like that to keep you from like, whatever. Now, I'm not saying it has to be this way, but like if we see it work out and this bottom ends up being a lot like that 2020 bottom, it's 100% possible. This could be like a long-term bottom. And the thing is like, even if we did break out here, this is the crazy thing. Even if we did break out here, there's no telling where we stop. We could easily stop at like 50% here. I mean, we could end up with this awesome run to like 60 or something and then end up bleeding back down, for a year and until we get back over to the creek again. Because this is like a massive, massive schematic at this point. It's humongous. Like there's so many different elements here that you'd have to deal with. in terms of like a breakout. That there's just so much that could happen. And there, now that we didn't make that V-shaped recovery, there's just a ton of room here to explore again, you know. So yeah, is this a humongous buy-in? Absolutely. Is this like one of the biggest buy-ins we've ever seen on this stock? Yeah. Does that mean it's going to rocket and it has to go straight up? I personally think the answer is no. But I know that there's a lot of people that would expect this to just continue up if it starts breaking out. And it could be that some of the folks that are calling for 5 right now are thinking about it in terms of that. Like, well, I don't think we're going to come back later. Maybe they are really forward thinking and they think, no, I think we're going to hit it now and then we won't have to come back later. And this is just like a low spring area. You know, I don't know. We see this kind of breakdown all the time. It's like, I call it a curtain rod. It often will happen after like a 4 top or some kind of a distributive action. This one really threw me off, you know, because I was hoping that obviously it was going to go the other way and not do that. But every now and then, of course, it does do that. So you have to just keep that in mind. And that's kind of what we're seeing on the small picture right now is we just had that earnings report and it just dropped off the face of the earth, right? And it's a lot like what happened on the bigger picture here. And this is where things get kind of crazy to me to think about because, you know, I don't think about this as all being the same, but if you stare at it long enough, then yeah, it looks pretty darn similar, right? Aside from like this secondary cat ear, you know, which is obviously really flat down here, it could be thought, you could think of this as like a gigantic version of what happened over here. I don't think that's wrong. Most of the time when we see AMC make a bottom, it does look like that. Like there's a bigger upthrust and then there's some kind of like distributive action. And then it either does an LPS where it doesn't make a higher low and it goes up, or it does a spring action where it comes down, it makes a higher low, finds support, and then comes up. And that's pretty much the only 2 ways we see breakouts anyways, or reversals anyways. And that looks to me like this whole thing. So when I think about all the bottoms we've encountered, they're all basically the same. They do one of 2 things, and that's because that's what, you know, that's what works. And that's why Wyckoff is so effective, because it boils down to one of 2 different options, usually, if it's going to turn around. But this is it. So when I think about it, I'm kind of like, I'm always thinking in terms of like, well, if that's the case, then the big picture would have to be like that if we ultimately want a long-term run. And it is, by the way, thus far kind of like that. You see what I mean? So where would we be? We would be in like the spring action right now. I think the greater question is, does the spring action result in a lower low in the future? Does it kind of abscond from that or whatever? Abstain from that? Abscond. And maybe it doesn't ever really come super low again, but we do trade this bottom one more time. There's just a million different options for how you could navigate this and mislead retail and so on and so forth. So I think a lot of folks right now, they're looking at it like, they're kind of thinking about it in terms of like, this is the spring, and I don't disagree that it could be like that. And in which case, you know, maybe you come up, then you pull back, there's a bigger LPS. Keep it simple, and you can see why this looks super similar to what we were just talking about. You know, if you have a spring action here, it's pretty much the exact same thing that we drew, where you basically come up from the bottom, you push up, and then you come back down. You find support near the previous bottom here, which would be the actual floor. This should look really familiar. We just talked about this for like an hour and a half. It looks almost exactly the same as like the small picture, right? You basically just bounce. This is called the spring. This would be called the test, where you come back and you test the floor again. The floor being probably like this 1050. And then if it's a successful test, you take off. There can be double springs where you dip beneath the floor again. before that, and then you would just take off after that. I'm just of the opinion that it takes like a whole year. I think long operators are not necessarily in a hurry. And for something as big as this, y'all, this would be a huge deal because no matter what happens at this point, once you get to this top, even if they wanted to redistribute, this is a great chart. And I'm like of the opinion, I've been of the same opinion for a long time, that it's like, I used to say it was 21, right? Because I still believe that. I think that no matter what happens, and you guys are like, this guy's crazy. It's never going to happen this way. I really don't. I don't feel that way. I don't feel like I'm crazy about this, okay? I think that no matter what happens, even if this takes like a year plus, okay, that at some point in the future, whenever this happens, it could take 6 months, it could take 2 years, doesn't make any difference. At some point in the future, once this does break out, I don't see how it doesn't go back to this high level at 185. I really don't. I think the idea of accumulation for the purpose of coming back up, it could take 10 months, like it did in 2020. It could take a half a year, whatever. The whole reason you would do that is so you could come up and either redistribute or break out and make new all-time highs. And we can look at like the schematic here, and we can start estimating like, well, where maybe would it go? We just did this right here where we had this estimation that maybe this breaks down and it comes back up to the previous top and redistributes. If it's doing this tiny action, I know this looks clunky as all get out, but maybe we should just ignore that. Maybe I'll make it way simpler, okay? Because if you look at the way we just diagrammed this a minute ago, notice that this guy comes back to what would be considered like the liquid floor. You see that? In that bounce? And it does so, obviously, this is pre-spring. This would be after the spring. So it's kind of a difficult one. But I still think it's very similar, right, to what we would experience normally. So I think that the likelihood of this coming up pretty high is good, right? But then there's a really strong chance that you're going to reaccumulate somewhere in here, probably around 13, And that's the early on stuff. So I'm redrawing that part. So I think that's pretty strong likelihood. And then I think there's going to be an early rejection after that. And I don't foresee us coming above 30. That's just me. I think that that's where the creek is. I think if it pushes it, great. But this is how you kind of form out like that bigger bottom, right? And you'll note that like we just talked about this, there's these upper trend lines right here that kind of tell you where we might go in the future. Look, this micro played out on this macro should be possible. So what I did on the micro here is I grabbed this corner on this little tiny bounce and I pulled it up to where we had support. This is ultimately like where the stock goes, like this is where that final hook happens right here. I mean, it tells you the direction of the stock. And the same thing could happen right here, right? So you can take this and there's a number of probable points you could, look at. This to me is probably the 50% marker right there. And then there's another one, which is sort of the breakdown, like where did it break down? And you look at that. I would do it like exactly where it broke down or right on this edge. And that gives you a sense of like, oh, well, first move could push up pretty high. And then, maybe it takes forever. Maybe it does take years and years and years. We have ways of kind of doing the same thing, I guess is what I'm saying, depending on how this thing reacts in the next year. So I think there's a pretty strong chance that we'll see something similar in terms of entry and exit. And then once it does exit, if it ever gets back up to, and it will, I think it will, but once it eventually gets up to, could be 2027, could be later, 189 or something. That's where you have that. It might even be this hook. It might be better to do that. Sure. I mean, that adds up. So this is like July of 2025, right? Do I think it's possible that this reactive move happens and then eventually, it gets up here by that point in time? Yeah, this to me is more realistic than people saying that they think it's just going to go straight up, which I'm not saying it's impossible, but that would require some kind of a massive short squeeze effort. And we've already had one of those, and it still took a while. I mean, it still took a long time. It was fast, I guess, in the grand scheme of things. It was an exciting time, right, to be alive. But I don't know. I still believe that there's a stronger chance that this has a push up early. I don't think it immediately breaks this downtrend. If it did that, it would have to run from basically where we are now all the way up to 45. Like, it would essentially have to go straight up to like 60 and then consolidate and then do it again, much like what we saw in January. And I don't think that's going to happen. I just can't see it repeating like that. I think it's more likely, again, just an opinion, but it's more likely we see a 50-50 move first, then we see a long-term breakdown, and then when we come back down, we actually find support in like January of 2025 or something. And then we have the bigger breakout. So we'll see. I don't necessarily think, voice cracked. I don't necessarily think after that point in time that we have an all-time high. I think you could argue that this is very possible because you would need to come up and form an SOS. So again, it's kind of like a question of like, how long does this take? What happens after this? I think there's likely going to be a period here. There's low liquidity where there's a decision that's made and it takes 3 to 6 months or something like that. And I don't know what's going to happen after that, because here you could find that there's just not enough buyers at this level and there's no reason they would take it higher. So what you would then do is you would maybe, this is a big maybe, you would maybe come back above the high here one more time. I don't necessarily even think it has to make new all-time highs, just has to come back above that original high, because that's where you would redistribute, and then you would just take it back down and come back down to some other level and just continue on indefinitely, If they do come up here and they find that there's still adequate number of buyers and that there's a desire for a markup and there's not a billion people selling off, which will definitely happen. I mean, I can't even imagine it not happening, because I can't imagine how many people would want to stay in this stock if it came back up here again. Almost everybody I've heard from wants to get out. But who knows? Maybe by this point you'd have a renewed interest in a squeeze or something, and they can sort of force that narrative too. And you never know. At this point, it could end up being this thing that it does break out and goes to new all-time highs. And new all-time high doesn't have to be like crazy. I can't imagine this thing being like $600 a share. It just doesn't make sense to me. But sure, it could be another 100% bump or something like that, and then it tries to like find support instead above 190. But if I'm being honest, I just don't know how you could value this stock. This is the same thing when they were at 72. Outside of the short squeeze narrative, I didn't feel like there was any real reason to believe it should sustain those levels. So I find it to be disingenuous to kind of assume that it would just keep going to the thousands or something, There'd have to be some other kind of, I don't know, something else. Maybe AMC becomes the leader and they get out of debt somehow and they become the leader in all movie things, or they become this huge distribution company like a Walt Disney or something, which I don't foresee happening in the near future. Disney made a lot of its money just distributing movies, not making them, but just distributing them. I mean, when you learn about their distribution deals that they made with like Pixar, for example, they used to take a 50% cut. That's huge. All they're doing is putting their name on the movie and putting it out in movie theaters. I'm not saying that's not expensive, but to take a 50% cut is a huge deal. So if AMC became a distributor, it changes the game, right? That's what they tried to do with the Taylor Swift stuff very successfully. So I think the concept there of distribution in a good way, not in like the way we talk about it in the market, but just distributing films could be a really big deal for AMC in the future if they can make it work. But something else has to change too, you know? Like the dynamics of the film industry are very different now than they were 10 years ago. And they're going to keep changing. But there's so much stuff that goes direct to Netflix now and Disney Plus and all this other stuff that something would have to change. There's got to be an additional, it's not just about making money and diversification. It's also just the nature of the film industry. There has to be something, you know? So we'll see. And those are unknowns. Obviously, there's people who have insider information, but anyways. So this is how I would look at, in terms of like the future of the market for AMC, this is how I'd look at it probably, like personally. You know, is that it would have to be something like this if it were going to have this long-term strength, I guess. Short term was what a lot of people care about, but honestly, with the prices as they are right now, if you really felt like there was a strong case long term for this thing getting back to like 189 in the next couple of years, there's really no reason to fret too much about the short term action. I know that I'm in the business of making swing trades, so I definitely swing a lot of stocks, and I was trying to get into a swing on ChargePoint right here. I couldn't get it, and I would have swung it up to this price right here, 330, not beyond it, because I wanted to see this thing break the trend and then have a retracement. Now I'm just waiting because it's having its retracement, but it was an easy 30% swing for shares alone. And then if you look at the options contracts, they blew up, right? So, I mean, it was a good trade, but long term, I'm looking at this thinking like a year out, and I'm not trying to pump ChargePoint to y'all, but this is just a trade that I'm looking to make. It's coming into an earnings, and I don't really know what's going to happen with the earnings, but I do believe that this company is poised to come back up to $5, and probably it will end up coming back up to this floor it dropped off. It's really not yet. So I'm looking at it coming up to between $7 and $10 within the next year. So I think this is a really great opportunity for like a leap. You know what I mean? It's at all-time lows, historic lows. I don't think this company is going bankrupt. I don't think it's going to continue down. You know, unlike, unfortunately, I hate saying this, but unlike a company like AMC, where you're kind of left with this horrible idea that it's just being shorted to death, I personally think this is probably just a massive push down for a bigger range that's going to form out. So, yeah, it seems like a no-brainer to me that, at some point in the next year, it's probably going to come back up in this area. And I think it's highly likely. So this is, to me, is like an opportunity to take longer term action. So it's not like everything I'm trading, I'm just saying that because not everything I'm trading, especially in relation to AMC, is going to be like super short term. Right now, if I were trading AMC, and I might get into some trades soon again, I'm looking at 733. Like, I'm looking at the bottom we're at right now. I really do think this is the most likely course of action. I could be wrong, but here's where I trade it, right? I don't trade it from this bottom. You might think that that's stupid, but unless I'm getting leaps that are like a year out and I don't really care about the price action, or maybe 2 or 3 months out and I'm feeling like, yeah, maybe by January, no matter what happens here, I think it's going to come up. Unless I'm doing that, I'm not going to jump into a trade where I'm trying to catch a falling knife. Not usually. All right. I'm going to be looking at local breakouts. I'm looking at two main things here. Two big ones, right? But I think that this is kind of self-evident. I've already sort of drawn it out for you. These are the gap levels. They're 50% reductions. I think it's going to come and hit those in sequence, but it's going to do it. In order to do that, I say it's going to. In order to do that, it has to break these creeks in sequence like this. And I think the stair steps are there. Now, if you look at this on a glance, you might think this is like the work of I don't know, a crazy person. And maybe I am a little bit crazy, but like, you saw me set it up and why I set it up the way I set it up. And I think that it's very likely, based on everything we know right now, that we're going to get this drop. I don't know how fast it's going to come back up. It could take a while. It could be Monday. I wouldn't buy into Friday necessarily unless we started seeing it reverse and break out. So at this point, I'm really just waiting for kind of a confirmation of breakout. It's that simple. To me, it looks like it's not likely going to be Friday, but I guess if it did come above Friday, maybe it's a trade into Monday, that kind of a thing. Maybe we end the week right at $8. That seems possible to me. If it comes up to $8 on Friday, I think it's broken out. So that would be a potentially really good trade. Obviously, that's tomorrow, so it's a very tight trade. But beyond that, like, I'm just kind of waiting for that breakout. And if it just sat here going into Friday and it stayed at like 750, that's different, right? You may be waiting till Monday or Tuesday. There's still a lot of room here to kind of mess around. So I would just consider that as like the most likely thing to have happen, right? So from here forward, like, I don't foresee this being like indefinitely bearish. I think we're going to see a turn over the next day or three, and then we'll see. If it can manage to make higher highs and build out support again along these gaps, I'm at least going to ride it up to 10. But I don't think beyond 10, it's going to just continue. Not right now. I know there's some folks that have said, and I think the CoinDex thing said something like that, where it would go to like 7 and then back up to 13. I'll be honest with you, if it goes from 7 to 13, I'm leaning a little bit more towards a larger distributive action where it then breaks down and comes way low, because that's a completely different setup. And if it comes up to 13 immediately, it's more like February where we had that widening and there was that change of character and it suddenly broke up and it kept going. And then it went up, in this case, it would go up to the top and then come back down. And that was not good, because that was an example of like a really long-term distributive style action. And I knew it was going to come back really low after that. And it would, right? So you would come up to like 13 and then potentially break down and come all the way back down to like lows. So this is much better for us. It's much better for us to go from like 733 to 10 and then back down to like the 6s or LPS. So I'm not going to I'm not going to comment on AA. I see some comments about that in the chat. I don't particularly agree with a lot of the stuff that he's done in terms of timing, but the guy's going to have like $1 billion in cash on hand. And I'm sorry, but that's a lot of money. So he needs it for the cash burn that they go through. They're improving their financials. They just had the best quarter they've had in like 100 plus years. So, I mean, historically, right, versus the previous Q3 or whatever it was. So you look at that and you kind of got to take it for what it is. Like, the company is getting healthier. It's not out of the woods yet. It still has a ways to go. I think 2 to 5 years still, of battling. And that's assuming that nothing bad happens. We don't know. Like, we don't know what's going to happen. Nobody knows, Because if World War III started tomorrow, I'm sorry, but, your movie industry is probably going to tank again, or there's just things like that, no pun intended, I said war and tank, but you know what I mean? The point is, like, you just don't know. So I don't feel like Adam Aaron is in charge of the world. He's just a guy that's in charge of a company. And I think some of the things he's done make a lot of sense. I think some of the things he's done are infuriatingly badly timed. And it does seem like he is timing things out in a way that kind of stops us from having strong momentum. But I trade on technicals predominantly, and I don't ignore fundamentals. They're always there. And so I know that it seems like I ignore them a lot. I don't ignore them. I just don't focus on just the fundamentals because I don't think AMC is a good fundamental play right now. And I think that's probably why it's as low as it is. I think there's arguments to be made that it could be a good fundamental play, but it's getting to that point. So can I defend it as a fundamental play? Yeah, but only in a long-term example. And that's why I don't think it's going to just rocket straight to the moon. I think that would be like another fake out, type deal. And I just think that that's not what we ultimately what the market wants for AMC, if that makes sense. I think it makes a lot more sense, and these are the comparisons, to have this bottom form out, to come back down, to trade again, and to go. And a lot of what happened on Ape traded in these regions, right? It traded between $1 and $2, which is like 10 and 20. So there's a lot to be said about the liquidity over the last year, while we had Ape, and what that did and didn't do. And there's a lot that could be said about how that isn't really portrayed here in the stock. You don't see that liquidity on the liquidity shelves, for example, the VRVP. There's nothing. It looks like nothing's been traded here, but there has been. There's already been a range built out here. It just was done on a different ticker, and it had volume. It had liquidity, but that's not portrayed here. So that's not me grumbling about it. I'm just saying, like, it's a fact that there was liquidity. You know what I mean? There was trading that happened in this range over the last year, and it's not. You're not seeing it. So you can kind of like look at it from, oh, this is good. So on the 4 hour, we're getting a buy signal. This is a pretty good indicator too, the way I set it up. But hey, there's a buy signal. Usually wait for the double buy signal on the RSI, and then it's a decent buy. It's not perfect though. As you can see, sometimes it reverses like hardcore. But the way I set it up, it's pretty accurate most of the time at finding good bottoms. There's sometimes like weird stuff like this happens where it identifies a bottom, but then it ends up taking forever, and it's more of like a break even. But it's like these two examples right here. It's pretty decent most of the time, identifying a place it might turn. And you can see it gave an RSI sell signal early on the 4 hour, but it did end up being accurate. So if you have a buy signal, number one, that's good. It just has to do with the crosses, and it has to do with the way I set up my RSI. It's not exactly like everybody else's in this particular instance, just the statistics of it. So, makes sense. So here's my thought. I think we're going to get a shallow S-curve. And if I'm wrong, I'm wrong. I'm sorry. But I'm not advocating that anyone buy anything. I'm saying that what I'm doing is waiting for that breakout. I've got those two key markers right there. We've got to break this guy, and this guy. And so I'm waiting for the bottom. Then I'm waiting for those breakouts. If those breakouts happen, I'm buying, right? Buying in. Could be within the next few days. I'm getting out at 10. I don't think it's going to run to 13. I could be wrong. If it comes above 10 and finds support, then you'd probably know. Oh, it's above 10 and it's finding support. Okay. You know what I mean? That's that. But that's my thought. And then I think it's going to come back down. I think based on the way this is going right now, it looks like it's flipped from this inverted model. To me, it looks pretty obvious that it's flipped from the inverted model, which stayed above the 50%, and even though in the beginning it looked really similar, to this more bearish model, which isn't bearish at all. It's just one that includes a spring. And so I do think we're going to come back up and redistribute along nines. And then once we redistribute, we'll come down and meet new lows. And honestly, this probably is going to be one of these things that takes longer than it appears, but I have it right now to look more like into December. It's really similar to the way the January one's set up timing-wise. So somewhere in December, you'd end up with these lows and then potentially climbing back out, you know? And at this point, things change a bit. We don't have this information yet, so I can't tell you for sure yet. But you'd probably have at this point like another creek. And so it would give you, again, a secondary sense of like timing, which we don't have right now. So I just don't. You know, there is this guy, and that one might be helpful down the road. So I would take a line from September 5th through the top on the 13th or whatever, through the top on November 3rd, October 13th, November 3rd. And then this is the one that ultimately you'd want to see break. So it could take a while. You know, it's not simple in that regard. But yeah, then I would expect there to be a push up. So this looks to me like January. Like it doesn't look like it would get there any sooner, just based on what we drew. Because remember, we said it was somewhere between, it's oddly like symmetrical right here, right? It's kind of creepy actually. This triangle's flipped upside down. So this looks like January 11th. So right now, I would say that to me looks like the most likely candidate. That it might cross above it, and it would probably be before then. It would get there like early and then come back through it. But you see what I mean? Like this to me looks correct. And then that would be, the rest would be like sideways for a bit. I have it just going straight up, but that's not quite right. Probably be like here and then go sideways. Maybe into another earnings report, right? So, look, if I'm right about it, cool. Then that means that we're probably not getting up to 13s until like January, which is like 2 months away. And if I'm wrong about it and we go down first, it honestly could be faster because if we go down first, it means we're springing early. If we go high too early, it could mean that it's not going to happen. Obviously, you would already be in calls if you're thinking it's going to go up, but I think that would be a more bearish situation if it went up too fast too soon. So this is kind of what I would look for after the setup, and I know this is making the chart super messy, but I would basically be watching, this is assuming that we had an LPS, which may or may not happen, but I would be watching this kind of a breakout, and it could take a while, you know. If I'm going to accumulate low, I'm probably going to spend a week or two doing it. So the breakout for this could be like a Christmas type deal. So I feel like there's a pretty strong chance that we see something like this, and then we'll see, you know. And I could be wrong, but I feel like the analysis we did today was a pretty decent analysis on understanding like the setup, understanding it in terms of a Wyckoffean theory, but then also understanding it in terms of like a big picture, seeing how everything kind of came into this moment, understanding that this could be an S-curve that drops down, and if so, it could be a substantial breakdown. And you know, you watch these things with curiosity. Even if this comes back up and it has that hooking moment, which hasn't happened yet, great. But then once it comes back down, you have to then still see this break out because this could also hook, right? I mean, these are things that you can't take for granted. Like if this broke down again, it's just breaking down, you know, and it comes the other way. So eventually, you know, you get to this point where, all right, maybe we're sort of working our way up in accumulation towards 770, and then we break out, and that's where you have it happen. You don't even need to buy in now for that. It would be way later. The idea of folks kind of pumping the stock, that's not what I'm all about. And I'm not saying that this, in this hopium way, that this should happen. I'm saying that this could happen. It looks pretty likely to me, and that ultimately, if it happened this way, you've got over a month to kind of watch it go or to trade it, you know. So easy enough watching the trend breakdown right now, seeing if it breaks out, watching the reaction probably up to mid-9s, and then I think it comes back down. Yeah. And this is exactly where those two liquidity spots are. So to me, it's a really good, actually a really good range setup. I just think it's going to take longer than everybody wants it to take, which stinks. But anywho, at the very least, there's also these guys, and I don't know how they're going to play into it. This is a GFC indicator. I use it every now and then because it typically tends to control price action, especially if it's an area where you're about to break out or break down. There usually is some kind of a measure of control. So these are failure to delivers. This is like T35s for each of these marks. These little green guys. One's on December 26th. One's on January 9th. One's on January 17th. That January 9th one's really close to where we saw the intersection here. These first ones, this is your futures rollovers. So this is exposure date, rolling date, expiration date. So you've got one is on November 20th, the next is on December 6th, and the next is on the 14th. So again, it's sort of one of these things where it makes sense to me that this could take a while and that during this period you could have a wave to the upside and then back down again going into the rollover. We'll see. I'm not really great about this type of analysis. All I know is that it tends to play out pretty well if you can find a pattern. The only time I successfully found a great pattern for that was on SPY during the downtrends, and it turns out it was right. It ended up running from expiry into T35s. So that was specifically for SPY during a downtrend. So that would be like us running from December 13th through December 25th, basically. And then maybe into January 9th, seeing like that reversal or something. That's in line with what we're kind of seeing here as a possibility. So I think it's another just sort of layer. I don't chart the anymore. I don't chart the short interest dates. Those do sometimes have an effect as well for AMC, but I don't chart them. So makes sense. All right. Well, I'm done for today. I got to do some other stuff. I got some construction projects I'm working on around the house and over at my dojang. And I got some other things I got to get done today, so. No, I don't think you're wrong, Slider. I think it's just a matter of this. If that's true, and this is a really good value play, then this is an accumulation. And and operators take their time. Like they really will do as much as they can to keep the price down so they can accumulate shares before they mark it up. So it's not a matter of like bearish or bullish in that sense. It's a matter of like time. And like if it truly is a value play, then you'd be expecting upside. But it's like, how long does that take? Well, it could take a long time, right? So that's why I'm not particularly worried about it long term at this point. I really don't worry about it all long term. I think long term is going to come back up. I really do. But I think that because I think it's way undervalued now. But I think it took a long time to get to that point, right, where you start seeing the volume again return to the stock. So anyways, you guys have a good one. I got to head out, and I'll talk to you later.